US stock markets closed in a mixed scenario, as expected. And I mentioned this morning on my before the bell pre-analysis, pre-opening market analysis. I mentioned that, in pre-market, almost all of these were down, except for the Dow Jones that was really flat. But, the worry around the market was, in regards to the inflation and the fact that it dipped pretty good, almost at a point we were losing 500 points on Nasdaq, 200 points on Dow Jones, and then 100 points and 150 at a point on the S&P. After Jerome Powell's speech in regards to the inflation and what they're gonna do, everything kind of recover a little bit, which is definitely not the case for cryptocurrencies, where we saw Bitcoin losing 12%, Ethereum 14%, Ripple 17%, so all double digits lost today. And personally, I think this is a sell-off, regarding the all-time high. These assets have been touching and have been on a really bullish trend for the last 2-3 weeks. So even though people would think it's because Janet Yellen, the U.S. Secretary, was concerned about the inefficiency and the fact that not as a lot of volume is being now used by cryptocurrencies as a form of payment. So I think this will recover. As a matter of fact, Square already bought the dip, and I think they just disbursed 170 million on Bitcoin. So it wasn't expected to go further and further and further without retracing. So this is a healthy pullback for me, and definitely I'm still bullish on Bitcoin and other cryptocurrencies. So the pre-market session scenario didn't actually transpire into the actual intraday session. Again, this is something I always remind the viewers on. It doesn't matter what is happening pre-market, doesn't matter what is happening after hours. This doesn't necessarily need to be the exact same scenario in the actual trading hours. So keep that in mind as you plan ahead for your investment or your trading strategy. Now, someone says whenever there is blood on the street, this is actually when you need to be greedy, meaning whenever markets are really red, like we saw early after the opening today, this is really when you need to go shopping. Red markets, you need to see those red markets as, shopping time, because in order to make profits and to make money in the stock market, you need to buy low and you need to sell high. So whenever the markets, all assets all across the board, like today, are red, that's definitely the day where you need to be buying, because they will recover. They will recover. It doesn't matter how much time it will take. They will recover, especially if the fundamentals are still there. Let's take, for example, Palantir Technologies. So we're going to take a couple of sectors here. So Palantir Technologies opened up, and then dipped to a lowest on the day around $24.11, and then recovered up to $27.33. So if you bought at 24, and then sold or kept it as the closing as of now, 26, that's almost $2.5 a share profit you will have made in just a single trading session. Now, another, giant on the tech industry, Tesla, dipped to 621 and then went up to 703 to close around 699. So that's a profit of almost $80 a share just in a single trading session. So not really bad. Let's take another example on a different sector. AMC within the entertainment industry. Now, dipped to 624 and then went and closed up to 770. That's, almost $150 a share profit in a single trading session. That's huge. That's huge for such, a stock price for AMC. And let's take another example on a different industry, guys, so you can see that the best strategy to buy stocks or to invest in the stock market is to buy when markets are red. Callon Petroleum, small mid cap in the oil sector, went all the way down to 21.77 to close at 24.46. That is 269 profit per share, almost 11% in a matter of, few hours. That's very, very interesting, guys. And let's take another example, within a different industry again, so that you can see what I'm talking about here. Carnival Corp, travel industry, cruise industry, 23.59, the lowest of the day, and then went all the way into the green zone to close at 46.46. So almost $3 a share, almost $3 a share for a $26 stock. This is a huge gain just for a single trading session. So again, guys, When markets are red, that's really when you need to be shopping. You need to be putting your money in order to, recover and make huge gains as we see now. Now, the difficult thing here is to time the market. And I don't think it's even possible to time the market. You might be lucky and buy when it's really low, because when the stock price is falling, you never know when it's going to end. You never know when the bottom is going to be. So the actual thing here is, when always what I recommend, anything I always do myself, whenever it's on a downtrend, don't put all your money in. Put a third of the money or even half of the money, at a price. And then if it continues to dip, then you can put another quarter or another third. And then as it continues to dip, you can finally put in, the additional third or additional quarter, depending on what is left. And if you bought, let's say, half or quarter or third, and then the price jumps back, the price bounces, then you average up. So in both situations, in both scenarios, you are always a winner, because you average down in order to have the minimum price possible, and then you average up in order to add volume as the price increases, and then you make sure you are on the trend and you are on the same direction with the market, which is always the thing to be on, when you want to be positive and make huge gains into the stock market. If you find this information valuable, and if you find it to be helpful for your process of learning and educating yourself into how to play the stock market, let me a thumbs up, and drop a comment in the comment section, and I will see you in the next one. All right, thanks guys. Cheers.